Hello, this is George, and what you're seeing in front of you is my Trading Simula 18 charting application that I've developed to help with Trading Simula, the platform, the testing platform that is in my latest book, Trend Following Systems, a DIY project. This is a good little application. It's in beta form. There's a lot of bugs in it. I haven't finalized it yet because I want to add a lot more indicators and things to it. But I am going to put this beta version as is on the website, trendfollowingsystems.com, because it's sufficient enough to plot data. I'm plotting Pinnacle data, continuous contract data, and it will also plot the trades. And as you can see, there are some trades on this chart. These trades are based off the system I'm going to describe today, which is a swing system, not a trend following system. I get a lot of requests for swing systems, and so I wanted to demonstrate that even though the name of the book was Trend Following Systems Do It Yourself, you can use Trading Simula to test a lot of different algorithms, and in this case we're going to test a PivotPoint system. Now what we've got to do, the first part of this algorithm, and I'll describe the algorithm in detail later in the video and also in the coding section of the video, is you have to mark pivot points on your chart that are significant. Now what makes a pivot point significant? In this case, a significant pivot point occurs after the last pivot, be it a high or a pivot low, that has at least 6 bars between the pivot points. If 6 bars have transpired, or more than 6 bars I should say, and a pivot occurs, then you mark it. And so going through this, we can mark these pivot points very quickly using that criteria. And the system is based off the penetration of those pivot points. So let's start with counting the pivots or marking the pivots on this particular chart. And I took a screenshot of it so we could actually make some marks on it, or indications of where the pivot points are. Okay, right off the bat, let's pretend like we're the computer. I can see one. Let's pretend like we're the computer, and we'll ignore this. We'll start with this subsequent long entry. Let's start marking pivot points after this entry here, and I see one right off the bat right there. Okay, and there's one here. Now that's a pivot. Now to refresh your memory, a pivot high is a high of a bar that exceeds the previous bar's high and the subsequent bar's high, and that meets the criteria. But does it meet the 6 bar criteria? 1, 2, 3, 4, 5, 6. It's on the bar 7, so it does. So let's mark that. Now we've got a pivot high. We need to go and look for a pivot low that's 6 bars or more away. I should say 7 bars. There's got to be 6 bars between the pivots, so it can occur on the 7th bar like this one. This one occurs on the 7th bar, so it's allowed, or it's marked as a significant pivot. So let's move on. 1, 2, 3, 4, 5, 6. We're still looking for a low pivot. Low pivot. Here's one here, and it's more than 6 bars away. 1, 2, 3, 4, 5, 6. We're looking for a high pivot. Got one right there because it's more than 6 bars away. Looking for a low pivot. 1, 2, 3. Can't be that. 4, 5, 6, 7, 8. There it is. Low pivot. 1, 2, 3, 4, 5, 6. Can't be that. High pivot. Looking for a low pivot. 1, 2, 3, 4, 5, 6. It looks like that's a, let's see, 1, 2, 3, 4. That can't be. That's on the 6 bar. So we need to come all the way over here. Another low pivot. 1, 2, 3, 4, 5, 6. Looking for a high pivot. I think we've got one right. 1, 2, 3. I was a little confused. I wanted to make sure. This looks like a pivot high, so let's go ahead and put it there, and it is 6 bars. I think it's a little higher than the subsequent bar. So we're looking for a low pivot. 1, 2, 3, 4, 5, 6. No low pivot, no low pivot. We've got one right there. And we're looking for a high pivot. Nothing, nothing, nothing. Here it is right here. So let's put that right there. Okay, so that's the first part of determining this algorithm, and a lot of times it's best to go ahead and look at a graph or a chart in this case and see how this thing should work. And if you do this, then it makes the programming of the system easier. Okay, so now that we have the significant pivot points plotted on the chart, let's go ahead and this is going to be a pure stop and reverse initially. That's the first version of this trading strategy. The second version is using a 8-bar trailing stop mechanism. So if you're long, you would use the lowest low of the last 8 bars to get out, and if you're short, you would use the highest high of the last 8 bars to get out. But for this first a version of the strategy, we're just going to make it a pure stop and reverse system. So let's go ahead and see if my algorithm that I already programmed before I did the video is following our logic that we've plotted on this screen. So let's extend our buy stops out based off of these significant pivot points. Did it sell there? It did. Perfect. Now, since we're short, we're looking to buy. And the only time we can buy is when we have a significant buy point or a significant high pivot, and we have one right here. Okay, but look, that never gets hit because we have an interim low pivot point. And so since we're short, we kind of just ignore that because we're looking, it's a swing system, so we want to buy, sell, buy, sell, buy, sell. So we ignore that pivot low. The only time that would come in play is if we were flat. So we're not flat in this case, in this version of the strategy. So we do not do anything. We get another pivot high here. And so we're short, so we're looking to buy. So let's extend that out. And we did buy right there. We have a pivot low. Let's extend that out because we're looking to sell short. That never hit because we had an intervening high. And since we're already long, we ignore it. So we have another significant pivot low. So we're going to extend that out. That never gets hit. We have a pivot high, but we're already long, so we ignore it. Eventually, we do get this pivot low. We extend that out, and we do get short there. Okay, so now we're looking for a pivot high to go long, and we got it right here, and we can extend that out. So that's basically the system. Now, did my programming logic follow the strategy perfectly? Let's see. We should have sold here, which we did. We should have bought here, which we did. We should have held that long position all the way up to here, and then we sold short based off this pivot low, and we did. Okay, so that's a swing system, and you saw how we developed this swing system on the chart. I actually pulled this old system out of the archives. This is a system from probably the 1980s, and I call it the pivot swing system. And so theoretically, by looking at the chart, it should be pretty easy to program. Sometimes these things, because the way you're sequencing it, it is a little more difficult. So let's go ahead and get into the programming of this system, and then we'll also incorporate a trailing stop, because the trailing stop can be a profit level, or it can be a protective stop level. Okay, this is how you program that strategy. The first version, which is the stop and reverse. This strategy, the code can easily be ported into easy language as well, and I'll probably do that and put it on my website. But I also wanted to show you how I've refactored Trading Simula, this version of Trading Simula, which you can get as well off of my website. Once you go through, I would suggest going through Trading Simula, the version that's in the book, and familiarize yourself with that. But what I've done is I've cut down the code probably by 50% of what you have to wade through to get to the most important portions of the script for the trading strategy. Okay. So that's good, and it makes it a lot easier to program when you don't have to wade through, and I've added other things that make it a little bit easier to execute the trades. Okay, at the beginning of the new Trading Simula 18 refactored code, you put all your algorithm parameters at the top, like your start test date, your end date, your ramp up, the day that you need to calculate your first calculation. You put your system name, your net capital, and how much commission. I don't put a slippage. I just say, throw that in there with the commission. So commission and slippage. If you want to do $25 for commission, $25 for slippage, just throw $50 in there. So that's at the very top. You don't have to wade through the source anymore. It's at the very top of the Trading Simula script. So we can scroll down. You can ignore all this as it says. Scroll almost halfway down. So let's go almost halfway down. And we are there. It's a little more halfway down, not much. Okay. Now, this system is a swing system, so you're either going from a buy state to a sell short state to a buy state to a sell short state, and ad nauseum. So the first thing we want to do is, if you're a computer and you're testing the first day, you could say, okay, the first thing I want to do is buy, and then I want to start alternating from that. And it could, flip a coin. You could say I want to be the first trade to be a short. It doesn't really matter, because in the long run it works its way out. Okay, so last up, meaning was the last pivot point high, is set to cond 1, and cond 1 is automatically set to false. Cond 1 is a built-in, it's very similar to the easy language condition 1. It's just a built-in variable, and it is turned to false initially. So last up is false. Up counter is market val 1, just like value 1 in easy language. It's 0. Down counter is 0. Buy level is 0. Short level is 0. These are all built-in variables that you don't have to worry about. And I like to assign real names to them so I can tell what I'm actually doing. I could have just used market val 1, market val 2, market val 3, market val 4, but I like assigning a name to the variables so they make sense. We know what up counter is, we know what down counter is, we know what buy level is, and we know what short level is by just looking at the names of the variables. Okay, so the first thing I want to do, and we won't go over every piece of logic, if it's the very first time in the loop, the very first time we enter the market, I'm going to set my buy level to some extremely high number so it won't buy, and I'm going to set my short level to 0 so it won't short. Now, sometimes it depends on what continuous contract data you're using. You may have negative numbers in your continuous contract data. So to be safe, and in this case I know I don't have any negative numbers in this data, you could set that to a large negative number like negative 9s, 9 nines. So you probably should do that. Okay, if last up is false, and it is, the up counter starts counting. So we start counting bars from the last up is false. We start counting the up counter, meaning bars. So if up counter is greater than 6, meaning we've gone past a 6th bar, we start looking for a pivot, just like we did on the chart. And this logic right here is your pivot recognition, your high pivot, or pivot high, I don't know what you call it, but we were saying if my high of D1, which is yesterday, D1 stands for yesterday, that's a new thing in Simula, Trading Simula. Instead of saying cur bar minus 1, we say D1 is greater than the prior bar, which is D2, and my current high is less than high of D1, meaning that D1 is higher than D2, and it's also higher than the current bar. D is today's bar. Then if that's the case, I'm going to set my buy level to the high of the pivot bar, which is high D1 plus my min move, which is 1 tick. Okay, since I've signified that I've encountered a high pivot and 6 bars has transpired, I go ahead and set my buy level. And since, as you know, we're doing that horizontal spanning with Trading Simula 18, where we go for every day you go through each market in the portfolio instead of going sequentially down each market, we're going across each market. So we have to use our current market index. So we have to set buy level, the current market is equal to my high, which is the pivot point of D1 plus min move. Short level, we're going to set to 0 because we're not looking to short. We're only looking to buy because we have a high pivot point. My down counter is now set to 0 because I'm going to start looking for the low pivot point. So I need to count the number of bars between the high pivot I've just established to the subsequent low pivot that I'm looking for. And I set last up current market to true, so we won't go back through this logic. And here I'm printing out, I found a high pivot. And when I print, I'm printing right to the Python interpreter window, which makes debugging so much easier. And I'm using PyScripter here, and it's got a great debugger. So I would suggest if you're doing any type of extensive programming in Python to use PyScripter or one of the alternate IDEs. The good thing about PyScripter is it's free. The only thing they do is ask for a donation, and of course I gave them one because I use it exclusively, basically for most of the stuff I do in Trading Simula. So let's get back to the algorithm and the code. So I've discovered a high pivot. Now I'm going to look for a low pivot. And I set my my buy stop level, my buy level to the high of that pivot plus a min move. Okay, so I'm going to go down here and I'm going to start looking for a low pivot. So I'm going to start counting the bars. Down counter becomes plus equals 1, which is a unary operator. It just automatically increments it whenever I go into this logic. And I go into this logic because the next loop through, last up current market, is now true because we set it right there. So we skip this portion here. This is completely skipped. We drop down to this else condition and we start counting the down counter. Once down counter equals is greater than 6, then we start looking for a low pivot. And if we get a low pivot, we put our short level current market, the low of the pivot point, the low pivot point, -1 min move. And then we turn buy level off. Basically, since we've discovered a low pivot, we don't want to buy now, we only want to sell short. So last up becomes false now, so we won't look through this code at this point anymore until it's turned back on from here. Okay, so that's how you go and you start marking those pivot points. All the while this is occurring, the Trading Simula, once you set those buy levels and short levels up to appropriate or real prices, it also looks at that to make sure a trade occurs or doesn't occur. So right here, and I've got the trailing stop mechanism commented out, but here is the entry to get short. And it doesn't matter which order you put these in because I go through them top to bottom, and you can change this up based on what's closer. A lot of times a system like this has the stop is to get out is as close as the stop to get in. So we can go over that a little bit later, maybe not in this video, but I will discuss that at some point. So let's look at how we can go short. If my low of the day, and remember you're sitting with the benefit, you have the benefit of hindsight or future leak, I should say, because you can see what happened today, and based on what happened today, you can make a trade during today, which is dangerous if you use it inappropriately. It's very safe if you know what you're doing. So that's what I'm doing here. I'm saying, okay, if during the day the low went below my short level and I'm not currently short, I want to go ahead and set the price, because it's a stop, to either the open of the day if there was a gap down, or the short level, which was the stop. My trade name is Pivot Swing Short. Number of shares in this case is just 1, and I'm going to enter short position. Okay, we go through there, we're short. All the while I'm still going through this logic up here to determine the pivot highs, pivot lows, and eventually it's going to find a subsequent pivot, an alternating pivot, and it's going to have a high pivot point, and I'm going to have a buy level. And I go in here and say if my high of the day is greater than buy level, current market, and position isn't 1, and its bar since exit is greater than 1, and I probably don't need that. That's just some extra code I put in there. You probably can ignore that. I set the price, either the open of the day if it's a gap up, or the buy level. I set the trade name to Pivot Swing, and then I go ahead and enter the long position. So that's how you do the stop and reverse system. Now, this algorithm also has, I'm going to go ahead and shut this down so we can plot the proper trades. This algorithm also uses a trailing stop mechanism of the last 8 bars. So my trail B and trail S, trail buy, will be the highest high, let's undo that, of the last 8 bars. I want to get out of a short position at the highest high of the last 8 bars unless I'm reversed. And I want to get out of my short position, I want to get out of a short position if the highest high is penetrated of the last 8 days, and I want to get out of a long position if the lowest low of the last 8 days is penetrated before I have entered into an opposite position based off the pivot points. So, and you're saying, why don't I have to use current market? Why don't I have to say current market here? Well, you don't have to use current market here because we are calculating this value on every bar. If a bar has to be carried over, in this case, like your buy level, sometimes it's not changed on every bar, it's kept. So it needs to have memory for the market. So that's how it knows that this buy level belongs to this current market. Now, if we calculated it on every bar, it wouldn't have to remember it. It would be dynamic memory. This way, it has to remember it because we're not recalculating on every bar. So let's go ahead and I'm going to go ahead and comment out the long exit, and I'll only go over the long exit because the short exit would be exactly the same, just the opposite. Well, I guess I shouldn't say exactly the same. It's similarly the same. If I'm long and the low of the day is less than the trail stop, and the trail stop is greater than short level. Now, what does that mean? That means that my liquidation point to get out of a long position is higher or closer to the market than my level to get short. That's all that's doing. And bar since entry is greater than 1. I don't want to get out on the bar that I get in on. Now, this is kind of important because trading Simula 18, since it gives you the ability to look at today's action and make a decision on today, you need to determine, do I get out of a trade first and then I go short? So you have to pay attention to that. Now, with TradeStation and Easy Language, you don't have to worry about stuff like that. But they don't give you the benefit of future leak, whereas Trading Simula 18 does. And I give that benefit because it makes programming a lot of things a lot easier. You just have to be smart about how you're using it. So basically, I'm going to say I'm going to get out at my trailing stop or the open of the day if it's a gap down, long exit, exit position. Okay, and the same thing goes for the short side or the short exit. I'm just going to undelete these. Uncomment. You see the red line there, that means I've screwed up the indentations. Okay, so let's go ahead and run this system real quick, and we'll replot it with the trailing stop mechanism built into it. Yeah, this video I know is getting awful long. It's 23 minutes. Just bear with me, we're almost done. And like I said, I will post all this information on the website. You give me a day or so, and it'll be up there. So we want to do crude oil. And in Pinnacle speak, crude oil symbology is ZU because this is the electronic version of the data. You could get the pit session by using CL, but the pit session is long gone. So let's do that. This should take very few moments. I'm printing out like the pivot highs and pivot lows on each bar, and as you can tell, it's already done. So it's very quick. It's as fast as most platforms out there. Trading Simula 18 is, but I'm trying to pull this up so you can see something here. It's slow. Recording does something to the screen, it seems. So I output the data in the trades to the screen. Of course, as you know, I've got all those reports. I got the Monte Carlo. Let it be interesting. Let's look at the Monte Carlo simulation on this. This is where you randomize the trades. You take them out of serialization. Where are my Monte Carlo? There we go, right there. Here's 100 histories. Looks like a lot of them are losses. So what does that tell you? That tells you that this system, well, I thought it made money. Maybe it didn't. Oh, I'm running the wrong thing there. Sorry. I'm looking at the wrong. I'm looking at. I should get into the right file. Sorry about that. Let's go to the PivotPoint one. Sorry about that. It's taking me forever. I apologize. Live video recording is not easy. This was Monte Carlo. There we go. Yeah, that makes more sense. Swing pivot Monte Carlo. So look at all these different histories by randomizing the trades with replacement. And the system in a Monte Carlo analysis says on average you should make $113,000 on the crude oil with this system with a $48,000 drawdown. Let's look at the trades one last time with the trailing stop mechanism built into it. Here again is my Trading Simula 18 charting package. I can go ahead and let's go. You need to plot the data that the algorithm is applied to first, or one of the markets. It could be multi-markets, but you want to pick one market that is in the portfolio of the algorithm that you've just tested. So we need ZU. We're going to load that data up. Here it comes. There it is. Let's load the trades file now. This is a little bit of a demonstration of Trading Simula charting as well. And like I said, I will give this away, this beta version away. So we need to go to Trading Simula 18. Sorry about that, guys. Trading Simula 18. Click once, not twice. And we're going to do the graph. Graph means the trades in a graphic format that can be plotted in a graphic format. So here we go. Boom. Let's go back to that time period we were looking at previously. And I've got like a little scroll bar here that you can pull back. And that was like 2017. We'll get close there. A little bit further. We were looking at 27th August. There it is. So here is something that we were looking at, 0821, here we go. There's that sell. We got stopped out. Let's see here. This is what it looks like if we were to draw everything on it. And as you can tell, there's that sell right here. Let's line that up almost right there. Okay. So that's it. We bought, we reversed, stopped out on the trailing stop, bought again, got stopped out, and then bought that big move up. We saw on the pivot points. And then we sold short here. Yeah. If you were to overlay this, you would see that the sells are exactly the same, except that we are not pure stop and reverse. We are actually getting out on the trailing stop making. Here's the highest high of the last 8 bars, lowest low of the last 8 bars because you're long. We hold on for the trend. So it made a little money. Not a great deal of money, but it's a swing system, and swing systems are difficult. So I hope you've enjoyed this video. It's long. I apologize for that. And if you have any questions, just email me. I'll post all this stuff on trendfollowingsystems.com. I will program the easy language and put it on georgepruitt.com. And remember, check out my books, amazon.com. Talk to you soon.